Well, happy day. We found Tomas. So our next speaker, as I said before, is Tomas Martūnas. Tomas is managing partner at Goldfish Fund, leading e-commerce and food tech fund in Baltics, who invested in such companies like Pigų Group, Powermed, Dorado Tech, Dancer Bus, Food Out Group, Chilivery, Welltrado, Snap, Save, and a few more. So please welcome Tomas on stage.
Hi everyone. Any expectations? Silence. Okay. So I'll try then to move to the startup journey from the investor perspective. So my target for today for you to share and disclose the way we think, because then it's aligned and we're on the same page. It's more easy for you to go to the investor and to ask for the money, because 360 view always helps. So I try to structure it in those topics. It's a little bit about myself, so you can take a look who I am. So it's also going to be more easy to align if we'll get a glass of tea or juices or water. Then the logic how we see at the cycle of the business and how it develops and how it develops your evaluation and when you become millionaires and then we become millionaires. Then just a thought, because some of you are here, some of you are already in the startup, some of you might be going to the startup journey. So I would like to share the views, what is to be in the startup and out of the startup, because I was in the both roles and an investor, so it's easy to understand all aspects. Then I thought that it's really worth to sharing what is the most important elements to any great startup, because we really get a lot of pitches, and if they miss those components, we just lose time in discussion and explaining why it is needed. So I think if you have all those items covered, it's going to be more easy for you to discuss with any investor. And then the last but not least is how the investor sees the targets, what they're doing, and how to talk with investors. And of course, if you'll have any questions after it, feel free to shoot. So myself, very long time ago, I used to work in SEB Bank and then spent 4 summers in Work and Travel USA, doing a lot of black work, cleaning tables, doing pizzas, a lot of other things. Then for 10 years, I was in the Swedbank, implementing mobile banking, Swedbank Internet Bank, then managing multinational clients, then managing corporate lending portfolio through the cycle, 9 billion back then. We had to lean with McKinsey. We have to establish bad bank, a lot of interesting things. And at the same, somehow it happened that I got interested in the ICT, so we had a company, it still exists, which started investing in different other ventures, so being like an angel investor. In Mobile Free got funded, now going busted, ecology discount card, private kindergartens network, app camp, app development company, tried different Kickstarter methods, and eventually ended up in the Goldfish Fund, which is providing investment capital for this. Now about Goldfish Fund, so we have few companies which here you probably quite well known, like Pigų, Food Out, Chile, and then there are a few which we did a lot of investments in different various markets, like in Iran, Kenya, Nigeria, South Africa, just to try the big markets, because big markets is also a very important thing. And last but not least, few companies which we're doing now. For us, it's important that they are really disrupting something. So like Dorado, Welltrado, it's on the blockchain, or Dancer Bus is about really disrupting electro vehicles in the bus space. Business development cycle. So it always starts from the idea. And they call it Valley of Death, because you probably meet here, generate some ideas with a glass of beer, but eventually from that idea, then you start working on it. Usually in the first 3 months, everyone dies. Therefore, it's called Valley of Death. I hope that you are going through. Then you're going through. eventually you cannot, cooking PowerPoint presentation or Excel, come and say, give me money. Yeah? Usually it is set it up. In Lithuania, it will be set it up this and next year. Different programs. Yeah? You go to triple F, it's meaning friends, fools, and family, in whom you ask money. You go to business angels. It's very simple. You look at your sector and think for the another companies who are great and the shareholders behind, and you ask, could you finance me because I'm in your field? This is like Vladas Lašas probably does, yeah, in what he knows. Then there will be accelerators. There is a Meta who provides the grants, e-checks, and others. So this is actually who should be financing you, or you finance it from your own pocket. So then probably there are nobody. So here's the most important target. I would say that you need to create some business plan. I say then it's in Excel, in PowerPoint. Usually it doesn't cost a lot. And also you need to collect team, because the great startup, it's all about team. Then you pass it through that valley of death, and you got some money, and you already maybe have some prototype. You interviewed customers. You did a little bit more research. You can come to the seed funds. Yeah, there are a few, and even more will be launched this year. I think it's going to be more than 150 million capital deployed for the seed investment, so which is quite a lot for Lithuania. It's more than 150 companies will be able to benefit out of it. Yeah. So the ones who are not in Lithuania, you can always reallocate to Lithuania, yeah, and set up here the company and got the financing. So, yeah, and here you need, of course, to develop, get first traction, do some monetization test, do go-to-market plans. And here you can expect that probably with the first tranche, you're going to get up to $300,000 US, yeah, which is like 250,000 euro, which is quite enough for any startup to run away at least for 12 months, to invest and to move the idea a little bit further. If you are succeeding in that, and this is what usually venture capitalists do not believe, then you come with a business plan where you say, I'm going to break even in 6 months. I'm going to break even in the 9 months. So nobody expects you to do that. Everyone understands that probably for 2 years, you're going to be burning money. And maybe in the year 3, you're going to be showing money, yeah? And maybe you're going to break even. So this is just a small recommendation. You don't need to put those unrealistic plans for yourself, because you're going to get yourself quite big pressure. And also, then investor, you'll have a hard conversations why you're not reaching KPIs, why you're reaching only 20% of it. Yeah? So put yourself assumptions first. Second, be very realistic. And then, of course, if you are successful, I think there are a lot of capital available in the market, not only in Lithuania. So you can get from venture capital funds. Probably the main fund which invested in you, if it's allowed, they will need to follow up. They should follow up, because if they not follow up, then probably there is something wrong with you. Because any investor, if I'm happy with my company performance, it usually will follow up. So this is also keep in mind. This seems to be like a simple thing, but your investor who invested, by definition, should follow up. With what amount doesn't matter, but it just shows the belief. Then how it's developed from the points of valuation, yeah? And then you might be losing the control. So in the seed, you have an idea which is worth 0. So share it with others, collect the team, do something good, and maybe you'll get some, valuation. So then you get seed investment, let's imagine of 200,000. Usually the split will be like that, meaning that if you got it on the post-money valuation of 900,000, a million, so with the old money litas, you're already millionaires, yeah? With the US dollars or euros, you're still not. But you're probably going to keep around 70%. The fund or the seed investor will take 20, maybe 30, depending on your negotiations. And then it will be asked for you to form the ESOP, which meaning employee stock option pool, which would be allocated to the most important people, which you might be need. Then you're going to be on the startup journey. Then, if everything is good and you got whatever, Series A 1.5 million investors, then all founders probably became millionaires, and you're still probably going to be having a control. because the first investor will dilute, and from 20 it will become 16%. A new investor will have around 20%. You will allocate something as op for key management and others. You still keep the company control, but you need to prepare yourself that with another Series B, you will not be managing. So meaning you'll need to align the interest, and it's okay if the investors and you need to be as a founder okay to do what you know best, and if you're not performing in your role, to be replaced with somebody else. If you would recall the Google story, yeah, Eric Schmidt was put it on the brothers, yeah, to manage them, for them to focus on product, and for him to focus on another things which are important to grow the company. Yeah? So look at it as a normal practice, yeah, focusing your efforts to what you know best, and at the same time, allowing others to do best. Because believe me, investors, then they initiate change. They are for making money for themselves as well as for you, because you are joint shareholder. Yeah? So look always from the positive perspective and ask yourself why they initiate that. Yeah? So that is magic question why. Now what is better, yes, to startup or not to startup? So then you startup, it's unlimited opportunity. So I always say in the 3-month journey, you're gonna learn to be accountant, tax advisor, assistant, lawyer, salesman, marketing manager, developer, everything, yeah, very fast. You control everything, yeah. If you decide to do, you do. You decide that you need to a little bit twist your strategy, you twist your strategy and you go to another direction. Seems there is no money, you twist the strategy. Recently you saw that Rafi, one of the startups, just decided that they're gonna be doing ride-hailing, yeah. So this is like totally like twist out of what they are doing, yeah. But you're flexible. And this is the first learning journey. At the same time, it means that it's great responsibility. Then you start hiring people, so you're becoming responsible for those people, yeah? For their families. So you need to take into account that, yeah? There is always multitasking. So you need to really become very good in the time management and in prioritizations. And it's total devotion. So meaning the venture capitalists don't like people who having, oh, I have this idea, that, and that. If I invest, I would like you to be fully focused on that particular business, yeah? To develop and to succeed. So this you need to take into account, and this is very important for yourself, because then you can really achieve something. If you're an employee, your work finishes at 6 o'clock, bye-bye, yeah? It's easy, no stress. In some probably jobs, you still need to work more, but in general, it's no stress. It's a shareholder stress, the company stress, whatever. If you perform, finished, I go with the guys with a beer, that's it. Usually it's specialization. So you have like certain mandate that you do this, and that function does somebody, that's it. So you passed it, maybe they performed, maybe not. Some blended result hopefully appears, but your responsibility ends somewhere. It's startup, you need always to work as a team, help each other, cover each other, learn, and do. And there, of course, there is no salary cap, but usually the venture capitalists don't want to overpay, because they want you to be focused on the long term rather than on the short term, yeah? You got the investment, you sit it in Lambo, you drive it, or Tesla. No, none of the investor wants to see that. Investor wants to see that you are still hungry, and you want to succeed, and you want to make money for them and for you. But not now, but for the future. So you need to just yourself, yeah? And if you're in the startups, usually your day finishes at 1:30, then you realize that probably need some few hours to sleep, yeah? Because there's always plenty of tasks on your table to do. And my 2 cents, just to finish this slide, is that strive for your desire, but do what you know best. So eventually focus with a team, make it that each member complements to each other, and then finally ensure that you actually collected a good team and everybody does what they know best. Then I borrowed it from Sequoia Capital. I think this is really like most important 10 principles, yeah? So take it into account, because through all my journey, now like 4 years in investing, I think this is the most important principles. So first, yeah, summarize the company business on the track of the business card. If you don't know, or you cannot do the elevator pitch for investor, what your company does, and it takes you 3 to 5 minutes to explain, it's really bad. So think about 1-2 sentences, which actually helps you to summarize what you do. It seems more hard than it looks, because then you sit down, you need to know how to do it, and then you need to make sure that if I ask another founder, he will tell it in the very same wording. So I'll not get talking with three founders, 3 different answers, what the startup is all about. So this is important, and this is what everything starts from. Second, large markets. Why large markets? Then there is a billion-dollar market. It allows you to do a lot of mistakes. If you do some mistakes, let's give you an example with food out. You're late with delivery. Customer are not happy. They're not giving you a second chance. That's it. You lost that customer forever. Yeah? So if the market is too small and you did too many mistakes with too many experiments, you're really bad in the situation and you somehow to recover your brand. So this is very important in general. And the big markets allows you for more opportunities. If for the small market, probably number 1 takes all, maybe there is an opportunity for existence for number 2, and maybe a little bit business of number 3. So then in the big markets, probably it can be 5 players. And being the third, you're still making a bunch of money. Yeah? So going in the small markets from the venture capital perspective, there is always upside opportunity. Because you always think about, when you invest, how fast you can grow. And in the small market, it's really hard to grow 10x. But in the big market, if you captured certain segment, it's really quite easy, if you are successful and if your product is really good, to grow it fast. So really focus from the very beginning to the big markets, because that would allow you, if you break through, to grow faster. Rich customers. Rich customers, more easy to pay money from their pocket. Very simple, yeah. Because if you go to the markets, we have very low GDP per capita. Then you calculate food, education, bank loan, rent, utilities. Eventually, you see that there is no money. Yeah. Then for any additional thing, which might be needed, might be not, I'm not spending money. Yeah. So it becomes, for the product which is not like really painkiller, it becomes really hard to take the money from the customer. Because in business, it's eventually customer needs to pay for a whole game. Yeah? So then you focus on the, I'm not saying that on the, for example, we have a Pavami in Kenya, which solar off-grid company, which solved the problem replacing the fuel lamps to the solar energy for the same cost. Yeah? So you can make money also on those segments. But for those segments, you need to deliver value with your product from the day one. If you don't deliver that from the day one, then it's really hard for them to convince, look, this is great solar lamp. How about you, from your $100 monthly income, to pay me an additional $10? No way. Yeah? If you save it, they will. If you don't, they don't. Focus. So this is about, focus. Be laser focused. Know your product, know your customer base, know your market. I'll just give you a simple example. If you're doing the pitch that you say, I'm going to be targeting and doing experiments in 3 markets. And I'm going to be targeting 3 different avatars, digital customer groups. And I will be trying few models of pricing. So then you complement that, you end up with 20 experiments. And you're a team of 3 or 4 or 5, which you'll need to run, which is not realistic. So you need to focus, do analysis and say, good, I have whatever, Germany, UK, France. I did an analysis. I will focus on Germany. Yeah. Then you say, I have this segment, SME, large corps, SSE, whatever. I did an analysis. The biggest problem is here. I'm going to focus there. I wanted to do a few experiments with pricing and to try different channels. I decided that I'm going to start and focus on that. Yeah? So focus. Be laser focus. And if it succeeds or unsucceeds, then switch to another thing. Don't do too many things parallelly. Painkillers. So think about it. Then you go to the dentist. How many of you go to the dentist once a half a year? Not many, yeah? I would say like 1/5. So what does it mean? It means if it's not hurt you, you don't go. And this is the same when you create your product and you think that it's needed, it's only in your head. If it does not hurt to your target customer, they will never buy it. Or you'll need a lot of efforts to put to convince them to buy it. But if it's really painkiller, then I will be buying it. So you need to focus, instead of creating demand, where a lot of startups, which is very expensive, because you need to explain that this problem exists, and then you need to explain that I solved this problem. So that explanation journey is actually very long, and usually startups die on the way. But if, instead of creating demand, you serve demand, then you're solving the problem, and then you're making money. So you're becoming faster money-making machine if you really found the pain which you're solving. Think differently. Okay, so this is, I don't need to probably extrapolate a lot, Think always about how to differentiate. There is always competition. Yeah? People, then they say, I'm unique, there is no competition. I think that if there is a problem, people probably solve it somehow. Even if it's not direct competition, there is always indirect competition, which you need to evaluate. Yeah, because the people somehow live with that problem which you are solving. So, and then you need to think differently. Because if you are the same, just like others, it's really hard to differentiate yourself. It's really hard to market. It's really hard then the customer starts comparing you with others and ask how different you are, and you have no answer, then you're in the problem. Yeah? So that answer, competitor analysis, and key differentiation point of view, or unique selling proposition, USP, you need to have it written for yourself and for investors. Team DNA. Yeah? There is a psychological proof which is set very simple principle. A-level people attracts A-level people. B-level people attract C-level people. What does it mean? Then the guys are really experienced. They usually want to work with the guys who are also experienced like them. They don't afraid to share. They don't afraid to argue. They don't afraid that, something will happen bad. B-level people always afraid that somebody whom I hire might be smarter than I am and can overcome me. Then they hire C-level people. And then, through the cycle, company becomes a bunch of shitty people who doesn't know what they're doing. So this is very important. And therefore, in the startups, usually, if you understand that you miss certain competence, then you try to attract somebody on the board level to commit capital or commit their time so they can drag you up with the competence and would help you to uplift your team to really become A-level people. So this is very important. Yeah? Agility. Yeah? So you just need to be very fast in doing things and changing things. Yeah? So corporate, if we decided that we need to change some program, some of the things, then I left Swedbank, they were implemented just like last year, like customer service programs, which take for the bank 7 years to do. So if I'm in the business person and I think it's worth doing, I just made a decision, created the plan, and probably in the month I'm rolling out. Yeah? So this is what differentiates startup from the really big giants. Yeah? Because you need to do it fast. Yeah? So nobody wants to wait. If we agreed, you execute it from now. Fragility, yeah? So this is what I try to say, that none of the investors want that, I transferred you 300,000 and I see on the next day you sitting in the new car. Yeah? So of course everyone needs to celebrate, yeah? But first we need to deliver. And then we exit, because the investors make the money, then you exit. Then your company is built and sold, not then they invest. Yeah? And there is a long path of the journey, and there are a lot of hills, ups and downs. So it's really, you need to manage through the cycle. Yeah? So you shouldn't overspend, neither time, neither money. Yeah? And if people think that in Excel, those budgets which usually investors request, you just need it just because it's written, it's needed. No, you need to think through the lines. You need to think what kind of people is needed. Am I paying the right market salary? Am I overspending? Can I do it cheaper? Yeah. So you need to be cost conscious in general. Yeah. You got the money. It doesn't mean that from day tomorrow, then you can start spending it, on everything what is nice. And Inferno. Inferno is about that if you found product market fit, be aggressive and very fast. Raise capital as much as you can, run as fast as you can. Yeah? But you need to find a sustainable business model, and you need to find something what really makes your startup a money-making machine. Yeah, because in the business, it's still everything about money. Of course, people on the journey, great problem solving, but if the business doesn't make eventually money, it can go bankrupt, which means that all investments and your shares value very nice zero, right? So don't forget it. It's not many startups who are able to monetize like the Facebook from advertising, not from other things. Yeah? So this is extraordinary, where you need to inject a lot of capital to do that. So don't forget of thinking about business model from the very day one. And then just what investors target. Yeah? So first target for most of the investors is to get profit. So they invest, and usually the fund projects that if I'm going to do 20 investments, probably 10 of them will go bankrupt. So those 10 which are remaining needs to pay off all the gain. Very simple. So usually, because they can fail, some of them will be really good, and other ones probably will not. So then I expect quite high return. So the capital of the seed investor and the return, there is a really high expectations. Yeah? If they invest for the 5-7 years, they expect that you will do 10x. They will make money. You can run that calculation yourself, because if you're not doing it, then eventually you'll have a quite difficult conversation with the investors. So this is just how investor thinks. Some of the investors do as a capital preservation. But this is maybe for the later stage of you. I have a lot of capital. I see a quite good startup. You're already cooking quite good EBITDA. You just need for expansion. I'm okay to support you to expand to another market because I believe that you're going to make me money. Yeah? And maybe 10% return is fine. Yeah. Then synergies. For some of the investors, it's okay. I'll give, I don't know, Didi in China is okay to buy Offer. Yeah, Didi is just like a Uber, and Offer is bike sharing. Yeah? So if I decide that I want to go to all transportation, not only cars, then for me it's kind of nice market fit to take the bike sharing company, which is doing quite good. Yeah? So this is synergies, and it can be found in different ways. Yeah? I don't know, some retailer is willing to go to e-commerce. For him, it's okay to acquire some e-commerce grocery food delivery company. Yeah? And of course, this is more for the angels, it's self-actualization. Yeah? So if you're doing something, you can always Google and find angels talking about that, so you can approach them. And, I am already like 50 or 60 years of age. I have, a few millions of capital. I always dreamed to do, something really big. but I've never managed on the global scale. I did it on the local, and now I see the young, nice girl or guy or the team, and they're really willing to do that. Yeah? So for me, to convince me to put money is quite easy, probably, if it's going to be favorable conditions. Yeah? Because it's more like a social, and usually at the very beginning, you don't need a lot of money. So this is like, you need, then you're approaching investor, you need to think what kind of components is most important for them. If it's angel, then it's probably going to be self-actualization and they get profit. Yeah? If it's venture capital, self-actualization, maybe, but usually it's get profit. If it is a corporate client, it's going to be self-actualization, and then for the later stage, it can be capital preservation. And how to talk to investors, yeah? So the pitch usually needs to cover 4 most important fundamentals: product, the market, how you differentiate, team, and finance. Yeah? And of course, the conditions. So, you cannot go to the investor, then your presentation is not fine-tuned. Because this is the same as you saying, I'm selling this water, but, I'm not taking care of this. Yeah? You take this away and say, buy, it's a nice water. It's better than others. Why? Yeah? So you need to take care about how it looks. So usually it's about your product and your pitch. So you need to fine-tune. The second thing is about, you need to talk about investor language. So if they start talking with you about tag-along, drag-along, pre-money investment, post-money investor, and you don't know those terms, it's not many terms, usually, but you need to know them, otherwise you end up in quite difficult conversation. Or if you're in e-commerce and I start asking you, what are your cohorts? What is your CLTV? And you like looking at me and like, what are you talking about? Then we're on the different, like you're in the moon and I'm on the Earth, or vice versa. So it means it's going to be very hard for us to get the conversation. Yeah? So you need to get prepared. Then you go to investors to talk and to expect. Usually in Google, you can find a lot of things. How the pitch looks, what are the definitions. So just make your homework before you run. Provide numbers and researches. For the investor, it doesn't work. I questioned you about the dentist, and then I think that 20% now from the 100 is actually doing on the half-year basis, and then I calculated something. This is, I did research. No, it's not. So usually either you need to refer to real research companies, which is like, they're publicly recognized and, they do it properly, and then I can rely on those numbers. It's good that you went and verified them, but if it's just your research, it's not enough for investor to believe that, yes, this problem is absolutely can be extrapolated to that target segment. Then, as I say, usually the A-level team and the passion. If you talk with the founder and your eyes is like blurring and fogging it, and you're not passionate about what you do, why should I invest? Why should I invest if you are not even passionate about the startup? Because the positive energy drives the startup. If there is no that positive energy in the team, in the founder, why should I invest? So then you go, always think from that. Does that energy can be felt from you, then you talk to the investor? Because it's really important. And do not expect the fast result. Usually, funds do not invest, as I call, in dots. They invest in lines. They saw you. You seems like a good investment target. Yeah? I ask you, what's your next plans? You're going to say, I'm going to do this, this, and that. Probably. I'm going to take some time. And I'll come back in a month asking you, how are you doing? I'm remembering what you was promising. And I'll ask, what is your progress? And if I hear the same things, will do those things. And I say, what you have done, and don't have a lot to say, it's no go. Yeah? So think what you're promising, Because usually investment process is going to be 4 to 6 month journey from the first time you met investor till you got money in your account. So, you know, last 2 months it's probably going to be paperwork, but those 3 to 4 months it's just going to be, you know, back and forth, looking at you, looking at your performance, looking about the way you think, and so on. So think about what you're promising, yeah, and remember that it's not the fast process. That's it, what I wanted to tell you, and I hope those 10 things and sharing the 360 view, how investor thinks, will help you to become a better startups, better founders, and to create the good startups in which we and other colleagues from venture capital funds will invest. Thank you. I don't know how it's with Q&A. If there are questions, shoot. Any?
Hi. You said that you are receiving a bunch of pitches, and I would wish you to share how you select the ones to invest in from shitty ones. Are there, I don't know, top 3 things you said, oh, come on, this is the good one? Thank you.
Yeah, so, okay. First is the team. Is team capable to execute what they write on paper? So this is always number 1. Second, the product. Does the product really solve the problem? And does it have the possibility to live on this earth? Can it compete with another global competitors, with the peers? And the third, we look at the business model and we look from the end. Do we see an exit opportunity for the startup in 3, 5, 7 years? Because we think, whom we're going to sell this startup? Who would be interesting to buy what you're going to create? Because it's really very exceptional cases that you're going to be doing IPO. So meaning that 95% will going to end up in trade sale, meaning selling to somebody, to some strategic, to some private equity fund. What means that you need to start thinking from the very day one who will be your target buyers of that company. And what is important for those target buyers? How they evaluate companies, is it EBITDA, is it growth, what it is, what they're missing, what markets they're missing. So you need to study quite carefully that end game before you do investment. So those may be 3 things I think is most important before you decide to go for the investment or not. Any other questions? If no, then thank you once again and wish you a nice day.